that all orders which are passed below JC, close your eyes and appeal to JC appeal. Okay? Don't see the number of sections also. Okay? And you are not supposed to remember also all these things. You are not supposed to remember these section numbers. Similarly, any order which is passed by JC, any order, you will go where? CIT appeal. Let's read below. Orders appealable before CIT appeal. Shall I read? 143, 144, 147 and now even search order. So search order will be directly appealed to whom? CIT appeal. Did you find search order here? Tell me please. No. So search order will be directly appealed to CIT appeal. Rest of the order may be appealed to JC appeal, may be appealed to CIT appeal depending upon who has passed the order. Did you understand what I said? Please tell me. Now, after everything is over, what will the CIT appeal or JC appeal do? They will pass an order. Okay? Obviously, they will pass an order now that the appeal is completed. Now listen carefully. What will be the scope of their order? What will be what they can do with an order? Listen carefully. The scope of their order will be. You have to think like this. What is the scope of AO's order? Under 143 subsection 3, the AO will determine the total income, the AO will determine the tax payable, the AO will determine the tax refundable. Yes or no? Please tell me. What is the scope of order under 144? The AO will determine the tax payable, the AO will determine the tax refundable. Will it determine tax refundable under 144? No. Under 144, tax refundable is not there. Correct or not? Similarly, what is the scope here? What will the CIT do? CIT will do 3 things. Listen. How many things? CIT appeal can confirm the order. Whose order he can confirm? He can confirm the AO's order and say whatever AO has done is correct. It means, have you lost the case? If he says whatever AO is done is correct, have you lost the case? Second, he can modify the order. He can. It means he will increase the income, he will reduce the income, he can do either of the things. Are you clear? Third, he can annul your order. Annul means cancel. He can cancel the AO's order. If he is cancelling the AO's order, means AO's order is wrong. Correct? Have you won the case? Tell me now, please. Now, these are the 3 terms. Did you understand these 3 terms? Please tell me. Confirm means what? AO's order is confirmed. It means you are wrong. AO is correct. Modify means what? Increasing the liability, decreasing the liability. Annulling an order means what? Cancelling the AO order means you are correct. Assessee is correct. Correct? Now, Finance Act 2024. Finance Act has given an additional power to CIT appeal, not to JC appeal. Okay? To whom? To whom? Not to JC appeal. That if CIT appeal wants, he will ignore these 3 things and he can do the 4th thing. What he can do? But only in case of section 144 order. Which order? In case of 144 order, he can remand back the case. He can remand back the case to whom? To the assessing officer. Did you understand what I said? So what he will do? CIT appeal has been given multiple powers. Even JC appeal has been given all the powers. They can confirm, they can modify, they can annul. But now CIT appeal has been given one extra power. Okay? That he can say that in respect of 144 assessment, he can call the assessing officer. And he can say the assessing officer that you have passed an hopeless order. I want that you should do the assessment once again. Did you understand what I said? Did you understand? And now you will do the assessment. CIT appeal is saying Now you will do the assessment under my direction. I will tell you how to do the assessment. Did you understand what I said? This is known as remanding back the case to AO. Did you understand what I said? So this power is there only with whom? Can you remand back the case in case of 147? Can you remand back the case in case of, say, 158 BC? Can you remand back the case in case of 143 subsection 3? No. Only for which section? 144. Check please. Now, the CIT appeal has passed an order, or JC appeal has passed an order. Both of them pass order under section 250. Under which section? Under which section they pass an order? Acha, I would like to ask you a general knowledge question now. If these people are also human beings, correct? They are humans only, na? Correct or not? Now, if these people make an apparent mistake, can they rectify their mistake under 154? Any income tax authority can rectify an apparent mistake in any order, correct or not? So are these two income tax authority or not? Yes. When I say any order, will it also include appeal order? Yes. Any income tax authority is making apparent mistake will rectify the order. Is it clear, all of you? Please tell me. Now pay attention. Now, assessee is aggrieved, or even can AO be aggrieved? Tell me fast. Now, if an assessee is aggrieved, he can make an appeal to ITAT. Appeal to, and if an AO is aggrieved, he has to take a permission from his senior, that is CIT. From whom he has to take permission? From his senior, that is CIT. Do you understand that CIT is different and CIT appeal is different? Yes, CIT handles many other things. CIT appeal handles CIT appeal only. Are you able to understand? So, he will take an approval from CIT and he can also appeal. Now, in which form you will appeal, sir? Form number 36. Form number 36 here. 35 was for CIT appeal. Here it is which form? Form number 36 will be filed by whomsoever is appealing. Obviously, one party will appeal, na, not both of them, na. Correct or not? Now, there is some amendment here also in the time limit. There is some amendment in what? Time limit to appeal. Earlier it was 60 days. Earlier it was from the date on which the order was communicated to you. From how many days? It means that the day on which you receive the order, from that day, 60 days time you have to appeal. Are you clear? But now they have changed the time limit slightly, not very much, slightly, very slight change, very slight change, very minor change. Check. Now the time limit is within, read, from the end of the month in which the order sought to be appealed is communicated to the assessee or CIT or principal CIT. So have they increased the time limit or they have reduced it? They have increased, because now it is counted, first of all, 2 months. Secondly, they are counting from the end of the month. Are you clear? Yes, sir. So it is 2 months from the end of the month in which the order was communicated to you. Are you clear or not? Please tell me. Now, listen carefully, very important point. Whomsoever is appealing, if the assessee is appealing to ITAT, okay? Listen carefully, this concept is very critical. If assessee is appealing to ITAT, okay? Then ITAT will inform the AO. ITAT will send a notice to AO that an appeal has been filed against you. That and the AO has to file a memorandum of cross objection. What he is supposed to file? Within 30 days of the receipt of notice. Okay, within how many days? Now, what is this memorandum of cross objection? It is just that what is your point of view on this appeal which is filed by the assessee. Okay. See, if the assessee is filing an appeal in the ITAT, the other party should come to know now on what grounds the appeal has been filed. They should also get time to prepare or not. Please tell me. So within 30 days, they will give their points also. Okay. It is applicable vice versa. Suppose if the department appeals, then the ITAT will give notice to whom? To the assessee, and the assessee will file memorandum of cross objection within 30 days. Are you clear? And everybody has to file memorandum of cross objection. Okay, whoever is the respondent, they have to file what? Memorandum of cross objection. Till last year, there was selected category of assessees. Till last year who were supposed to file what? Memorandum of cross objection. But in the last year, Finance Act 2023, the government made an amendment that every assessee should file what? Please tell me. A memorandum of cross objection. Are you clear? Please tell me. Read. Now, what is the time to file an appeal? Amended time limit is there within 2 months from the end of the month in which the order was communicated to you, correct? And what is the time limit for filing memorandum of cross objection? Within 30 days from the date of receipt. Okay. Okay. Now both the time limit can be extended. You can check it. Okay. 2 months can also be extended by ITAT. 30 days can also be extended by ITAT. Okay. Now the next amendment is in section 268A, which talks about departments, appeals by the department. There has been slight changes in the tax effect monetary limits here. Earlier, the limit over here for filing an appeal to ITAT was 50 lakhs. Now they have changed that to 60 lakhs, and now to High Court they have changed that to 2 crore. And for Supreme Court they have changed that to how much? They have changed that to 5 crore. So these are small limits which has been changed. You can make changes in your existing book. If you have an old book, if you have a new book, then you need not worry. Everything is amended in our new book. Okay. So this is a small amendment. Just check it. Okay. Next is some prosecution sections. Which sections? First prosecution section is for non-payment of TDS. Is for what? Section 276B. This section provides for prosecution in case of failure to pay what? TDS or dividend tax. Now dividend tax is not relevant now. It is removed now. Dividend distribution tax. To the credit of central government. Such person shall be punishable with rigorous imprisonment. If you fail to do what? You will be imposed with rigorous imprisonment for a term which shall not be less than, but which may extend to 7 years with a fine. Check. With a fine. Okay. So if you do not pay the TDS on time, you may be in the jail. You may be in the jail for minimum 3 months, maximum 7 years, along with a fine. Okay. Now there is some genuine relaxation which is amended by Finance Act 2024. Genuine relaxation. The law cannot be so harsh. Okay. Yes or no? Especially Sina. Please Sina. Please see here. I did not pay the TDS. I made a mistake. I agree. But before filing the TDS return, I have paid the TDS. Before filing I have paid the TDS, I have paid the interest. Should I still be inside the jail? Please tell me. They used to put people in jail because of this. They used to put prosecution provisions on assessee. So the Finance Act 24 has made an amendment from 1st October. Shall I read? The aforesaid provisions have been amended to provide for exemption from prosecution to a person who has not deposited. Just because he has not deposited TDS, you cannot launch prosecution against him. Wait for some time. If the payment of tax deducted in respect of a quarter, if the payment of tax deducted in respect of a has been made to the credit of central government, has been at any time on or before filing the TDS return, quarterly TDS statement. Are you clear? So I agree that I have paid late, but at least I have paid before filing the return or not? Please tell me. You take the interest now. You take the interest. Why are you launching prosecution against me? Are you clear? Now, the next section is a very fresh section. 276, new section, new. You only read what it is about. I will not say. For search and seizure, we need to file a return now. 158 BC. Tell me. So, what is the time limit to file a search return? Maximum 60 days it is, or 3 months? Search case? I'm just asking you. I'm not saying you are wrong. Maximum 60 days. Yes. So if you don't file the return within maximum 60 days, it will be mentioned first in the notice, correct? The department will mention in the notice in how many days you are supposed to file the search return. But maximum it will be 60 days, correct? If you don't file the return, prosecution, check. 3 months, which may extend to 3 years, and fine. Are you clear? Are you clear? So this is a new section, obviously required, because earlier search and seizure was not a separate assessment, correct? Now it is a separate block assessment, therefore they have brought a new section, okay? Section 206AA. What does this section says? Pay attention. We need to do this preliminary exercise to get into the TDS chapter, okay? These are some basic things that we need to know as a student. Now 206AA talks about that if the payee means the other person, does not give PAN, does not give what? PAN card. See, if I am deducting your TDS, then I have to take a PAN from you, okay? Now, if you don't give me what? Please tell me. PAN. Then the law says under 206AA that I have to deduct TDS at what? At what? Please tell me. At a higher rate. Are you clear? Now, how much higher? If the payee does not furnish PAN, then TDS rate will be higher off at the rate specified in the relevant provision of this act. So whatever is the respective rate mentioned in under different provisions, like in 194C it is mentioned 1%, 2%. Like in 194J it is mentioned 10%. Like in 194H it is mentioned 5%, 2%. So I will compare the rate with what? The rate or rates in force. Now that is not applicable in day-to-day case. The second point is applicable generally in case of non-residents, okay? In case of where DTAA provisions are applicable. So you focus more on point number 1 and point number 3. If the payee does not give the PAN to the payer, then the payer will deduct TDS at the rate specified in under different provisions. Compare with what? 20%, and whichever is higher, whichever is higher. But there are relaxation under 2 section. Under 2 section, the maximum TDS if the PAN is not given is 5%. Okay, it is not 20. There are 2 sections in which maximum TDS is how much? 5%, not 20%. Which 2 sections are checked, please? 194O and 194Q. If the PAN is not given, then it will be 5% instead of how much? Please tell me. Instead of how much? Instead of 20%. Okay, now pay attention. Now there is a CBDT circular which came in the month of August 2024. Giving some relaxation to you. What kind of relaxation? See here, please, Palani. What kind of relaxation? We all know that we have to link PAN and Aadhaar. Do you know that or not? We have to link PAN and Aadhaar. Now, what was the last date by which we are supposed to link PAN and Aadhaar? That was 31st March 2022. Correct? If we have not linked PAN and Aadhaar till 31st March 2022, then we will be leviable with a penalty of with a fee of 500 rupees. Correct? And if we have not linked PAN and Aadhaar till 30th June 2022, then how much fee will be levied on us? 1,000 rupees. Do you remember that or not? Please tell me. Now, there is a very genuine case over here. In case of transactions entered up to 31st March 2024, listen carefully. Do you remember that I have told you this relaxation has been given by CBDT when I was teaching you assessment procedure? Listen to my provision very carefully, please. Palani, see here, don't write anything here. So long back I have told you that in the chapter of assessment procedure, at the beginning of the assessment procedure, while discussing the discussion of 139A, PAN card, etc., Aadhaar card, etc. I will just repeat it once again for you all. By 31st of March 2022, you are supposed to link PAN and Aadhaar. If you have not done it, point number 1, 500 fee. Till 30th of June, if you have not done it, point number 2, how much fee? 1,000 rupees. Then the government has given you one deadline of 31st July 2023. If you don't do that by that date also, by which date? If you don't link your PAN and Aadhaar till 31st July 23, then serious consequences will stand in front of you. We will not give you refund. Remember? We will not give you interest for that much period. Remember? And we will tell the payer also to deduct TDS at higher rate. Remember or not? 206 AA will apply on you. Are you clear? But then CBDT came up with a relaxation that all those transactions that entered till March, but linked till May, linked till what? Will not be subject to what? Higher rate deduction. Arey, don't remember anything in life. Okay. You can check here. Check this. So if a transaction is done by you till March, but if you have linked till what? Then will I be called as assessee in default for not deducting TDS at higher rate? No. Now suppose I did a transaction with a person till 31st March. I did not deduct the TDS at higher rate. Okay. Now does that person has a time till May to link the PAN and Aadhaar? He has time till May. Na? If it does till May, then if the payee link the PAN and Aadhaar till May, then what will happen to me? Then payer is not liable to deduct tax at higher rate, correct? But now a genuine problem will come. I have done a transaction with a payee till March. I have not deducted TDS at higher rate. I have deducted TDS at normal rate. He has time till May, correct? But in between, suppose he pass away. If he is dead, then tell me please. In between, if he is what? If he died, then should I be penalized? Should I be penalized? Tell me. That's what the relaxation is here. Check. In case of transactions entered up to March 24, and in case of demise of the deductee, on or before what? That is before the linkage of PAN and Aadhaar could have been done. Okay. There will not be any liability on the deductor to collect tax at higher rate. Are you able to understand? Please tell me. 100% understood? So this is a very recent circular CBDT has come up with. Okay. I hope it is clear to all of you. So there is one Finance Act 2024 amendment which has come. See on the board, please, all of you. There is an employer. There is an employer A Limited and there is an employee. Okay. Mr. X. Now, while deducting the TDS, he will compute your salary income, correct? Now listen carefully, Palani. He will compute what? and then he will get to a particular tax amount. Okay. Now, while deducting the TDS, should he give me the credit of some TDS already deducted by some other person? The bank might have deducted TDS. Okay. Some company might have deducted TDS on dividends. Okay. So, have I already paid the tax to the government of India or not? That much amount. Please tell me. So, should he give me the credit of TDS or not? Please tell me now. Did you understand what I am trying to say? Why not? Why not? Because only net tax is payable, na? Only net tax will be payable, na, in my case. The A Limited will compute your total income, na? Will include all incomes in it, correct? Everything will be included, na? To compute your tax, they have to include everything in your income, correct or not? So if they have to include everything, they have to give the credit also of everything. Otherwise, excess tax will be collected. Otherwise, excess tax will be deducted or not? Tell me now, please. So they will give you the credit of what? TDS. Now listen carefully. Listen. Now Mr. X has purchased a car. Purchased what? A car of 15 lakh rupees. Car of how much? Now, I hope you might be knowing that if any person purchases a car of more than 10 lakhs, more than how much? Then the car company will collect 1% TCS from you. What they will collect? 15,000 TCS is also collected in your name, correct or not? Is this also a tax already paid to the government of India? Is this also a tax for which I should get a credit? But there is no provision under section 192 to give credit of TCS. 192 only talks about giving credit of what? Louder, yaar, please. 192 only talks about giving credit of what? TDS. It does not talk about giving credit of what? TCS credit it doesn't talk about. Did you understand what I said? But this is also tax or not? It's a tax which is already paid to the government of India during the previous year, correct? So Finance Act 2024 has brought an amendment that employer, while deducting TDS, he will give you the credit of TDS as well as what? TCS from 1st October 2024, subject to some conditions now. Subject to some conditions. Shall we see? Now, pay absolute attention now. Otherwise, it's a tricky provision. Huh? Pay absolute attention. Don't be in a hurry now. While deducting the TDS, under this section, that is 192, employer shall give credit of all TDS, old provision, correct? And TCS collected from 1st October, correct? Of the employee. Is it clear? Now, let me decode the amendment in detail now. I have just told you the amendment in a very simple manner, okay? Shall I read the detailing of the amendment now? Currently, there is no provision to claim what? Credit of TCS from whom? Employer. 192 2B has been substituted from 1st October 2024, allowing employers to take what? Credit into account while calculating the TDS liability under 192. Are you clear? However, now listen carefully. The dangerous line is coming now. Are you listening? See, till here, whatever I said you, it is the same thing. From 1st October, employer while computing the TDS liability will consider TDS as well as TCS. Are you clear? But now the dangerous line is coming. However, the TDS under 192, TDS cannot be lesser than, the tax on salary income, the tax on which is otherwise deductible without including non-salary, that is personal income declared by the employee, and the tax deducted or collected by others. Bouncer or not? The provision has gone bouncer na? Parani, the provision has gone bouncer or not over the head? Over the head it has gone or not? Now listen carefully. It's very simple. To put it differently, TDS under 192, TDS under is higher of the following two options. We need to compute two tax. We need to compute which tax? How many tax? And then whichever is higher, that will be the TDS. Okay? Shall I? First, computation without including other incomes. Computation without including, it means you will compute tax only on which income? Only on salary. Tax on minus what? HP loss is the only loss which you will get. Okay? That too if you are under old regime. If you are under new regime, even that will not be allowed to you. Are you clear or not? So what is the first computation that you are going to do over here? Without other income. Only take salary and HP loss in the old regime and take only salary in the new regime. Are you clear? Are you clear? Compute tax. Have you computed? Yes. Then minus any TDS or TCS by other person. Okay? This will be your tax number 1. Are you clear? Now you have to compute tax once more. Once more, which tax? Computation after including what? Other declared income. Okay? Like dividend income you might be earning, business income you might be earning. Okay? Include everything. Now compute tax on salary. Minus what? HP loss. Plus what? Other incomes. Okay? Are you clear? And then minus TDS and TCS. Okay? Have you computed two tax? Whichever is higher, that you have to deduct as an employer. Are you clear? House property loss declared by an employee with the documentary evidence will be considered under either of the two options. If the employee pay tax under which regime? Optional regime. Because if he pays under new regime, house property loss will not be allowed, correct? No other loss can be declared for the purpose of tax under 192. Are you clear? So, which two calculations you are going to make? Tell me please. TDS will be higher of. TDS will be higher of what? Option 1, what you will do? Salary minus HP loss. Okay? You will compute tax on this. Okay? Minus what? You can take all the TDS and TCS claim. Okay? Option 2, what you will do? Tax on salary minus HP loss plus other income tax. Okay? And then you will take the credit of TCS, TDS. Okay? Whichever is higher will be allowed to you as a that much TDS you have to deduct. Are you clear? That much TDS employer will deduct, na? Tell me please. No, it's not necessary. It's not necessary. Option 2 will be higher. Let me tell you. Let me give you one example. Okay, pay attention. You will feel that always option 2 will be higher. Not necessary. Let me show you how. One example I am putting in front of you. Now this is the example that I want to put in front of you. Okay, I want you all to copy this example first. Then we will write down the answer. Okay. Have we written the question? Now, what is the first option as per which we are going to compute tax? Tell me, Palani. We will compute tax on how much amount? 3750 plus. Alright, tell me now, please now. See here, yaar. Do you know the provision? Understood the provision or not? 3750 is your salary. From that you will take first of all standard deduction or not? How much standard deduction is available? No, there is an amendment here also. Let me tell you. In the new regime, now you will get standard deduction of 75,000. How much? You are following old or new regime? New regime, na default regime, correct? So 75,000 minus, how much it comes to? 3675. In option 1, you will compute tax as per what? Salary minus HP loss. But HP loss is not allowed under new regime, correct? So you will compute tax only on salary, correct? So compute tax on 3675. How much tax will come on 3675? Let me tell you the slab rates. 3 years slab rates. Up to 3 lakh, no tax. Above 3 lakh, up to 7 lakhs. Up to, they have changed the slab rates also. Up to 7 lakh, it is 5%. 7 to 10, 10%. Then 10 to 12, 15%. 12 to 15, 20%. Above 15, 30%. Compute. Surcharge will not come because income is below 50 lakhs. Okay? Compute. Tax. How can tax be 23 lakhs on an income of 36 lakhs, Palani? Huh? Palani, I will kill you, please. Nan unnai, controvertiven. Palani? Nan unnai, controvertiven. Correct or not? How come tax on 36 lakhs 75,000 is 23 lakhs? Which country tax you are saying me? Niveda, how much tax is coming? The only hope is you only. 820 for 200. Check here. Palani. How much? Did you get this? Now from that, in option 1, what you will reduce? TDS and TCS. TDS is 6,000, TCS is 32,000, correct? So TDS 6,000, TCS 32,000. So therefore option 1 tax is coming how much? 786 200. Are you clear? Now in option 2, what you are supposed to do? Please tell me. Consider other income. So 37 lakh 50,000 minus 75,000 is your standard deduction, correct? And how much is your other income? Please tell me. 60,000. Okay. So answer come to 3735. Okay. Compute tax on that. Compute tax on 3735. See, under the new regime now, listen. Under the up to 15 lakh, by heart the tax, it is 1 lakh 40. How much? Up to 15 lakhs. Okay. Rest we will see in detail later on, don't worry. Okay. In the chapter of tax rates. How much it comes to? 8,42,920 it should come. Did you get this? Then you will deduct TDS, TCS, correct? What answer you got? 804,920. Okay. Therefore, what is higher? 804,920. Whatever is higher, that will be subject to what? Tell me. TDS under section 192 as per the new amendment from 1st October. Okay. So, copy the answer please first. Copy the answer also, na? First. Now, do you feel that second option will always be higher? No, it's not like that. Not necessary. Think on it. Okay. Sometimes even first option can be more. Shall I scroll? So in option 1, what you are taking? You are taking salary, house property loss if it is there. But that is only possible under old regime, not under new regime. Okay. And in option 2, what are you taking? First, salary, then house property loss, plus other incomes also. Okay. Written. So this is where your first section completes, section 192. See, by default, section 192 is a hopeless section for us because the chapter of salary is not there in your CA final syllabus. So if the chapter of salary is not there, the question of TDS also should not come, correct? But because of this amendment, this can be important section, okay? So beware of this section. Are you clear? Now let's move on to the next section. TDS on interest on security circle. What? You are buying some bonds, you are buying some debentures of a company, okay, and earning some what? Interest. So they will deduct what? TDS. Let's read now. Pay attention. Who will deduct TDS? Any person. Whose TDS will be deducted? Only resident, non-residents are not covered here. Okay. Timing of deduction is also changing now. Credit or payment, whichever is earlier, not payment. It is credit or payment, whichever is earlier. Is it clear, all of you? Please tell me. So if I pass a journal entry, interest account debit to outstanding interest, am I liable to deduct TDS? Yes. Or if I pass an entry, advance payment of interest account debit to bank account, am I liable to deduct TDS? Advance, I am giving interest in advance. Am I liable to deduct TDS? Yes. Because TDS under this section is applicable on credit in the books of accounts or payment, whichever is earlier. Correct or not? Rate 10%. How much? 10%. Now, there is a long list in which case you are not supposed to deduct TDS. This is a list of non-deduction. Did you understand what I said? Are you ready for the list? Palani, ready or not? First, if the central government or state government security you are buying, suppose we are buying central government security, okay? Or we are buying state government security. Who will pay interest? Government will pay, okay? No TDS. Check. Okay? So they will not deduct what? TDS. But if you are buying Government of India 7.75%, this specific bond, this very specific bond, if you are buying saving taxable bond 2018, okay, which bond it is? Government of India 2018 saving taxable bond 7.75% interest. If you are buying this bond, or if you are buying the floating rate saving bond 2020 or any other security that the government may notify, then TDS is deducted and the threshold is 10,000 rupees. Did you understand what I said? So government will deduct TDS in case of these two security. Did you understand what I said, Palani? Apart from these two security, if you buy any government security, TDS is not applicable. Now, in this floating rate saving bond is an amendment made by Finance Act 2020 applicable from 1st October 2024. Check the date. Are you clear? Are you clear? Please tell me louder. So understood this point? Now, one small amendment is made over here from 1st October 2024. Now, there are a lot of people who do what? They classify their professional services as contract. What? They say that we have a contract with CA. We have a contract with lawyer. Okay. A contract only, no, ultimately. Yes. Everything is a contract, correct? Whatever service I am providing to you and you are making payment to me, it's also an oral contract na, between us. That I will provide you service, you will make the payment, correct? So the people are classifying their professional services as what? Contract. Why? Because in professional service the TDS is 10% and in contract the TDS is how much? 1 or 2%. Are you clear? So for that purpose, people are classifying their professional service as what? As a contract service. So the law has made a very specific exclusion from here. Okay. but does not include any sum referred in subsection 1 of 194J. Are you clear? Please tell me. It means whatever is mentioned in the provision of 194J, please don't try to pull that under section 194C. Are you clear? If it is a professional service, it will be a professional service. It cannot be called as a contract. Are you clear? Please tell me. From when? From 1st October 2024. Sure? So a contract of CA, a contract of lawyer, all these are professional contract. A contract of sportsman, professional contract. Don't drag that over here. Okay? That cannot come over here. Did you understand what I said? Please tell me. Now, 194 DA. 194. It is the payment in respect of life insurance policy. Which policy? Now, let me tell you a few things first of all about this before I read the provision. See, if any person buys a life insurance policy, then it is exempt if the following conditions are fulfilled. First, if the policy is issued between 1st April 2003 to 31st March 2012, which date I said? If the policy is issued between what? 1st April 2003 to 31st March 2012. If the policy is issued between this date, then the amount which will you receive now on maturity, it will be exempt. If the annual premium is up to 20% of sum assured. Annual premium is how much? Up to 20% of sum assured. Let me just show you that provision ahead. Check this. If the policy is issued between what? 2003 to 2012 and the annual premium is up to what? 20% of your sum assured, then the amount received on maturity is exempt. Are you clear? What if the policy is issued after 2012? If it is issued after 12 but up to 13, just for 1 year, then it is 10%. How much it is? 10%. What if it is issued after 2013? If the policy is issued after 2013, then for normal person, it is up to 10% of annual premium. Okay. And for disabled person, it is what? It is up to 50% of the sum assured. Okay. So the premium has to be within this limit. If the premium crosses this limit, then it will be taxable in your hand. Are you clear or not? Please tell me. So please remember these dates. Please remember these percentages. It will be very helpful for us later on. You have done this in CA Enter also. Okay. It was there in CA Enter also. I'm not saying it for the first time. But yes, it is very important in CA Final also. Okay. So coming back to the discussion of TDS. Where were we? 194 DA. So, objective of TDS over here is if the life insurance policy is taxable in your hand. Okay. If the life insurance policy itself is exempt, and when it is exempt? If you are within that limit. Okay. If you are within the limit of the percentages, it is exempt, correct? And please try to remember the limits. There are some questions based on that in the TDS chapter. Okay. So if you are within that limit, then it is exempt. If you are crossing that limit, then the maturity amount will be taxable. Therefore, the law also says, if it is exempt, no TDS. Fair enough? If it is exempt, the question of TDS will not arise. Are you clear or not? Fair enough. The question of TDS under this section will arise when? If it is taxable. And when it is taxable, if it crosses the limits mentioned there. Are you clear? Now coming to the basic things. Who will deduct TDS? Any person whose TDS will be deducted. Deductees, resident. Okay. Now what is the timing of deduction? Payment. Acha. In which all sections so far TDS is deducted on payment basis, not on credit? Tell me. Salary 192. Then accumulated balance on PF 192A. Then winnings 194B and BB both. Okay. And even online games, you can say. Online games on withdrawal, it is deducted. And in online games, now one more concept has come, that on closing balance also we will deduct. Correct? So this is the last case as of now, in which TDS is deducted on what basis? On payment basis. Are you clear? Now, what is the threshold here, sir? Threshold is 1 lakh rupees. Check. How much is the threshold? But listen carefully. It is written what? Palani, Mr. Palani. What it is written? See, it is written less than 1 lakh. It is not written, it does not exceed 1 lakh. Is there any difference between these two sentences? Huh? Acha, at most of the places, what are they writing? Does not exceed 1 lakh, does not exceed 30,000, does not exceed this amount, correct? But here they have written it is less than 1 lakh. It means if it is exactly 1 lakh, am I liable to deduct TDS? Tell me please. Yes. One more place it was written like this, it is less than what? Where it was written? Palani. Go and check accumulated balance PF. Check fast. There also it was written it is less than 50,000. Correct? This is the inconsistency and the beauty of the law. Okay. This is the inconsistent beauty of the law. Okay. At some place they write do not exceed. At some place they write less than. Are you clear? Now, TDS will be deducted how much? There is some amendment made from 1st October 2024. Okay. Till 30th September, TDS will be deducted at 5%. How much? From 1st October 2024, it has been reduced to 2%. Okay. 5% and 2% of what, sir? Here. 5% and 2% of what amount? Whatever amount the company is paying you. Say company is paying you 50 lakh rupees. Okay. Minus whatever premium you have paid over the years. You have paid premium to the company over the years. That net income will be subject to 5% and 2% TDS. Check please. Are you clear? Check it please. This is different, huh? Unlike other sections, this is a different case. Here the TDS is deducted on a different amount. Generally TDS is deducted on what? Whatever amount company will pay, TDS will deduct it on that amount, correct? But here it is not like that. Whatever amount company has paid minus whatever you have paid to the company over the years. Are you clear? The differential amount will be subject to TDS. I hope it is clear to all of you. So is this section clear to everyone? Please tell me. Shall I go ahead? Now 194G. What is 194G, sir? This is again commission on lottery. This is commission on what? Lottery. Only lottery. Okay. So who will give you commission on lottery? The government will give you commission on lottery. It is the state government who gives commission. Okay. On what? Lottery. Say you are a lottery seller. And I am state government. So whatever lottery you will sell, I have to give you commission now on sale of lottery. Please tell me. Otherwise, why will you sell the lottery? Yes. So who will deduct TDS? Any person. Whose TDS will be deducted? Again, resident, non-resident, both are covered here. Okay. Palani, be active. Huh? It is just the early hours of the lecture today. We have to sit till evening. Huh? Don't make such faces. You are forcing me to say that sentence. Okay. Which sentence? Credit or payment, whichever is earlier. Again, here also the rate has been reduced from 1st October from 5% to 2%. Okay. Sir, we have to remember both. Obviously, you have to remember both. Don't ask me such hopeless questions. Okay, henceforth. Palani, if it is changing in the middle of the year, are you supposed to remember both or not? Yes, it is changing from the middle of the year, na? Now, let me tell you, this is also changed, huh? This one is also changed. This is also changed. but it is changed from 1st April 25. When? So we are not mentioning that. Okay. Are you clear? We are not mentioning that in our books. It is changed in the next year now. Why should we be interested in that? Correct? Threshold is 15,000. Threshold is how much? 15,000. See, for all commission it is 15,000 only. Here also it is 15. Here also it is 15. Correct? So how many commission we have done so far? Insurance commission and lottery commission. Now we will talk about normal commissions. Which commissions? General commissions, which you pay on any item. Okay. So 194H. 194H. TDS on commission other than insurance commission or brokerage. Now here who will deduct? Any person. Refer note. What do I mean by refer note? For individual HUF there is a relaxation. Are you clear? When relaxation is there? When relaxation is there for individual HUF? If their business turnover of last year is up to 1 crore or if their profession gross receipt is up to 50 lakhs, they are not liable to deduct TDS under this section. Are you clear? Now, deductee, who is deductee? Resident. What is the timing of deduction? Credit or payment, whichever is earlier. Correct? Again, here also the rate has been reduced from 5 to 2% with effect from 1st October. Okay. So, everywhere where it was 5%, they have reduced to 2%. Are you clear? Everywhere where it is what? 5% they have reduced to how much? What used to happen earlier? Suppose I am Mr. A and my wife is there, Mrs. A. Okay? Mr. A, Mrs. A. We both are co-buyers. We both are co-buyers. And there is Mr. B and Mrs. B. Those are co-sellers. Possible? Okay? So what we used to do earlier to evade tax, Mr. A used to pay 30 lakhs to Mr. A, Mr. B. Mr. A used to pay to whom? 30 lakh to Mr. B, and Mrs. A used to pay 30 lakhs to Mrs. B. Okay? Are you clear? And then we used to say what? It is less than what? 50 lakhs. So Finance Act 24 has made an amendment from 1st October 2024. Okay? All the transferor. Who is transferor? Mr. B. Correct? And who is transferee? Buyer is the transferee, Mr. A and his wife. Correct? The limit of 50 lakh will be counted by joining all the transferor and all the transferee. Okay? So Mr. A and Mr. B will be added. And then we will count, is it 50 lakhs? Yes. I have to deduct TDS. Are you clear? And Mr. B and Mrs. B will also be added. Okay? And will be counted. Is it crossing 50 lakhs? Yes, it is crossing. TDS will be deducted. Did you understand what I said? See, this is also possible in... There are 3 possibilities actually over here. Listen to the next possibility. I am one person. But there are 2 co-owners. There are... All the co-owners will be clubbed. Correct? Or there is one owner and there are 2 buyers. Is that also possible? Then all the buyers will be clubbed. Are you clear? In short, you have to club all the buyer and you have to club all the seller and then compute. What? The limit of 50 lakhs. Check please. Where there is more than one seller or transferee, buyer, in respect of any immovable property, then the consideration shall be aggregate of the amount paid or payable by all transferees, means buyer, to the transferors or all the transferors for transfer of any such immovable property with effect from 1st October 2024. Is this clear to all of you? Please tell me. In short, we need to club all the buyers and check 50 lakh is crossing. If it is not crossing, we need to club all the sellers and check 50 lakh is crossing. Are you clear? Yes or no? If in either of the point, either at the buyer's point or if it either at the seller's point, if it is crossing 50 lakhs or it is 50 lakhs or more, then the buyers have to deduct the TDS. Did you understand what I said? Please tell me. Shall we start? Rent of if not covered under individual HUF. Okay. Can I say companies are always covered in 194I? Firm is always covered. AOP BOI is always covered. Only individual HUF are thrown out of 194I in some circumstances, correct? Correct. So if you are individual HUF and not covered in, then also you are supposed to deduct TDS if you are making the payment of rent to whom? Resident. Now when will you deduct the TDS? Every month? No. Every month there is no need. Every month there is no need. You will deduct in the last month. When? Last month of the financial year. Okay. For example, the rent is 60,000 rupees per month. How much? So first month pay full 60,000. Okay. Second month pay full 60,000. Third month pay full 60,000. Are you clear, Palani? In the last month, deduct TDS on the entire year. So how much is the total amount? 60,000 into 12. On 7,20,000, 5% deduct. How much it comes to? 36,000 deduct from the last month rent. What is the rent of last month? So from 60,000 divide 5%. How much it comes to? From 60,000 divide 5%. Minus 5%, sorry. Pay 24,000 to the landlord. Okay. Now that rate is reduced from Finance Act 2024 to 2% from 1st October. How much it is reduced? It is reduced to 2%. Here also they have reduced the tax rate from 5 to 2%. Okay. From when? From 1st October. Suppose there is an Amazon over here. Who is there? Amazon will be called as e-commerce operator. What Amazon will be called as? E-commerce operator. And there is a seller over here. Okay. Who is a seller? A seller is a person who is registered on Amazon to sell his product. Okay. There are lakhs and lakhs of sellers registered or not on Amazon. All of them will be called as e-commerce participant. E-commerce participant. Okay. The seller has to be resident. The seller has to be resident. Now, there is a customer. There is a who goes to Amazon and he orders a phone. Okay. Say the phone is of 50,000 rupees. How much it is? 50,000 rupees is the price of the phone. So this will be paid to the Amazon, correct? Please tell me. And then Amazon will pay what? Pay the seller, correct? How much Amazon will pay to the seller? The gross amount is 50,000, correct? Will Amazon deduct its commission? Say 5,000 is deducted. And how much is paid? 40,000, 45,000 paid to the seller. Okay. Now shall we start the discussion? Shall we start the discussion? Now listen carefully. The government says Amazon has to deduct TDS. Amazon? TDS. How much? 1% of the gross amount. 1% of the gross amount, not the net amount. Are you clear? If the seller is what? If the seller is resident. If the seller is non-resident, don't deduct. Okay. Is this clear to all of you? Now this rate has been drastically reduced to 0.1% from 1st October. How much? 0.1% from which date? From 1st October. The way all other TDS rates have been reduced, this is also reduced. Okay. We will do one last section as of now. 194T. Come. Very important. Mark. Amendment. Very important amendment. Partnership firm. Partnership firm giving what? Interest, remuneration, bonus, commission, whatever name. Okay. but not share of profit. But not on share of profit, do not deduct TDS, that is exempt. Are you clear or not? So who is deductor here? Firm. When I say firm, will LLP also be included? Yes, firm is paying what? Remuneration, salary, interest, bonus, commission. Are you clear? To whom? To partner. Who is the partner? Any partner. Resident, non-resident, every partner are covered. Okay? Now what is the timing of deduction? Credit to the partner account, credit to the, or payment, whichever is earlier. And how much TDS you will deduct? 10% TDS you will deduct, whichever is earlier. Okay? Are you clear? See the threshold they have given, 20,000 rupees. It would have been better that they don't give any threshold only. Correct or not? 20,000 rupees for the entire year, partners remuneration and interest. Okay. Now listen carefully, some very important point. Suppose I am a firm, you are a partner. Okay. You have invested, see, listen here. You have invested 10 lakh capital in my firm. How much? I am paying you 2 lakh interest. I am paying you. How much is allowed as deduction to me? 12%. That means 1 lakh 20. Only that much is taxable in your hands, correct? Do you remember or not? Whatever is allowed to the firm, that is taxable in the hands of the partner. Remember or not? Remember, na? Pakka. It should be mentioned in the deed also, correct? But while deducting TDS, do you want to listen? Do you have the guts to listen? Do you have the guts to listen, Palani? Do you have the guts or not to listen? While deducting TDS, entire 2 lakh rupees will be subject to TDS. Okay. You don't have to check whether it is exceeding 12%, whether it is taxable in the hands of partner or not. Correct or not? Okay. The same is the case with remuneration. How much remuneration is allowed to the firm? Up to 90%, up to 60%. Okay. So if I give excess, give excess remuneration, it is not allowed to the firm, correct? And it is exempt in the hands of partner also, correct? Because it is disallowed in the hands of the firm, so exempt in the hands of the partner, correct? But while computing TDS, deduct on the entire amount. Check, read. They have not mentioned anywhere that you are supposed to deduct TDS only on taxable portion. Are you clear? They are saying deduct TDS in excess of 20,000 rupees. Palani, understood or not this point? Entire amount deduct TDS 10%. Don't think of it. How much is taxable, how much is exempt. That you think, all of them you can think while filing the return of the partner. Okay. That is relevant for computing PGBP expense. That is not relevant for TDS. Are you clear or not? Pakka clear? Have you read this entire point number 3? Read na then. How can you read so fast, yaar? Eh? How can you read so fast, Palani? Tell me. You don't know yourself only. Understood? Niveda? Acha, on share of profit, will you deduct TDS? Now, the important point to be kept in mind for exam, it is applicable from 1/4/2025. Huh? Therefore, in financial year 24-25, will you deduct TDS under this section? No. Acha, what is the status for financial year 24-25? If I make a payment of interest to a resident partner, what will you do? No TDS. 194A restates. Remember? What about if I make payment to non-resident partners interest? 195. What about remuneration to resident partner? There is nothing, nothing mentioned there. No TDS. Okay. What about to non-resident partner remuneration? 195. Okay. Now, let's go ahead with the next section. Before I go ahead with the next section, I would like to ask you some basic questions. I am payer here. You are payer. Suppose I am paying you a rent of how much? 10 lakh rupees in this year. And on that I am deducting TDS at the rate of 10%. That is how much? 1 lakh. So I paid you how much? I paid you 9 lakh. Okay. Now, when you will show your rental income, while filing the income tax return, you will show how much rental income? 9 lakhs. How much rental income you will show? You will show 10 lakhs obviously. This means what? TDS is also your income or not? Please tell me. It is your income, na? Whether the TDS deducted by the payer should be included in your income or not? Please tell me now. So TDS is your what? Is your income. Where it is mentioned? It is mentioned in section 198. Where it is mentioned? So there is a specific section for that. There is a specific section which says what? The TDS TDS deducted by the payer. The TDS is an income of the payee. Is an payee. Now there is a small clarificatory amendment made over here. Which amendment has been made? Small clarificatory amendment. Listen carefully. What kind of clarificatory amendment has been made over here? So let's read the provision first. Be careful. Section 198. Inclusion of taxes withheld outside India for calculating total income. TDS deducted for the purpose of computing the income of the assessee be deemed to be income received. Correct? Is it clear? In other words, net amount, that is payment credit minus TDS, should be what? Please tell me. It should be grossed up and shown by you. Correct or not? Please tell me. Now, grossing up when tax is withheld outside India. Now, there is some misconception in the assessee's mind which has been clarified by the Finance Act 2024. There is some kind of misconception. Now, what kind of misconception was there? I am trying to explain you. Please listen carefully. TDS in India and tax withheld outside India for which an assessee receives credit against tax payable under the Income Tax Act are deemed to be income received for the purpose of computing the assessee's total income. Now suppose you are doing some activity outside India. Okay. See here please. You are doing some what? Say Virat Kohli. Okay. Is Virat Kohli Indian resident? Yes, he is an Indian resident. First of all, everybody has to agree to this. Is he an Indian resident, Niveda? Yes, he is an Indian resident. Okay. Now Virat Kohli is going to America. He is going to what? America. Or he is going to London and he is playing cricket over there. Correct? Is he earning money over there? Yes. Is he earning money in England? He is earning money in the entire world. Correct? So their country, that is the England board, is giving him some money, prize money, etc. Correct? Now Virat Kohli is a resident and ordinary resident. Correct? Suppose Virat Kohli has earned 10 lakh rupees in England. Listen carefully. Virat Kohli has earned what? 10 lakh rupees in England. Whether the England government would have deducted his TDS over there? Yes, as per their tax laws, they would have deducted TDS. Say for example, the England government would have deducted 1 lakh TDS out of 10 lakh. How much? So how much they have given to Virat Kohli? 9 lakh rupees they have given to Virat Kohli. Correct? Now that 9 lakh rupees Virat Kohli will come to India. Correct? Now, whether Indian government will take tax on that money? Yes, because Virat Kohli is RNOR. Correct? So Virat Kohli is a resident and ordinary resident. Agreed or not? For him, the world income will be taxable. Correct? Now, whether that 10 lakh rupees should be taxable in India also? Yes. Now Virat Kohli is saying that I will write 9 lakh only. I will write because 1 lakh though is taken by the England government now. That has not received to me. Correct? But the Indian government is saying no, you have to gross up and write 10 lakhs. You have to Because for that 1 lakh tax which you have paid in England, we will give you DTAA relief or not on that 1 lakh rupees double taxation relief. Please tell me. So we will give you foreign tax which you have paid in foreign country. Do we get? All those who have not done DTAA will not appreciate this. But whatever foreign tax a resident pays outside India, they will get the credit of that tax in India. So I am asking you a very simple question. Whether that 1 lakh rupees which is paid in England, whether he will get the credit of that in India or not. Please tell me. So therefore, he should include that 1 lakh also in the income or not. Please tell me. That's what they are trying to tell. Whether taxes are deducted in India or whether the taxes are, please, withheld outside India. You are taking the credit of that in India. Are you clear or not? Therefore, you have to gross it up. Please tell me, is it clear or not? So the rule is very simple. Ultimately, what is the amendment? The amendment tells you, if you paid any foreign tax, if you pay any for which you are taking credit in India, okay, you have to gross up that also while computing your income. Are you clear? Sure. Okay. So let's move on to the next amendment, and the next amendment is you all might be knowing about quarterly TDS returns, that we have to file TDS returns in every quarter. That is by 31st of July, 31st of October, 31st of Jan and 31st of May. And for TCS it is 15th of July, 15th of October, 15th of Jan and 15th of May. Now what is the time limit to correct this statement? If you make some mistake in this, then can I correct the statement? Can I rectify the statement? Can I revise the statement if I make some mistake in that? So they have put a time limit over here now, that with effect from 1st April 2025, no correction statement shall be delivered after expiry of 6 years from the end of the financial year in which the TDS or TCS returns are required to be delivered. So if you are required to deliver the TDS returns in financial year 24-25, then the government has put a time limit that you have to correct it within 6 months within 6 years from the end of this financial year. So if the TDS return is required to be filed in 24-25, then you should correct it by 31st March 2031. That is 6 years from the end of this financial year. Okay. So this is a small amendment which is there over here. Now next amendment is also a very small amendment, as you can see over here, that when there is a delay in furnishing, when there is a delay in deducting or paying TDS, then there is some interest. What is the interest? If you delay in deducting TDS or TCS, then there is 1% per month interest. Okay. And what is the interest for delay in paying? So if you delay in paying interest, then it was 1.5%. But for delay in payment of TCS, listen carefully. But for delay in payment of what? Delay in payment of TCS, there was no interest. So if you delay in paying TCS, then there was no interest chargeable on you. So Finance Act 2024 has added, along with TDS, now even if you delay in paying TCS, then that will also be what? Subject to what? Interest at the rate of 1.5%. I hope it is clear to all of you. Okay. I hope it is clear. Similarly, there is one more amendment over here, that if you are an assessee in default as per section 201 subsection 3, so the AO passes an order under section 201 subsection 3 to make you assessee in default. If you do not deduct TDS on time, if you do not pay TDS on time, if you make default in paying and deducting TDS, or he will also make you assessee in default under 206C subsection 7A if you make default in collecting TCS and paying TCS. With respect to that, a small amendment has come, that no order shall be made deeming any person assessee in default for failure to deduct or collect TCS from any person at any time after expiry of 6 years from the end of the financial year in which the payment is made. So they have put a time limit for passing an order of assessee in default. Earlier the time limit was not there. So now they have put a time limit for passing an order for making a person what? Assessee in default. So by when they should pass an order? They should not pass an order after expiry of 6 years from the end of the financial year in which the payment is made, or credit is given or tax was collected, or 2 years from the end of the financial year in which the correction statement is delivered. Which correction statement we are talking about? We are talking about this correction statement. Whichever is later. So they have put a time limit, 6 years from the end of the financial year in which the payment is made, or 2 years from the end of the financial year in which the correction statement is delivered, whichever is later. An assessing default order should not be passed later than these two dates. So maximum these two dates, the AO should pass an assessing default order. After this, if he passes an assessing default order, then that order will be considered to be a void order. Okay, I hope it is clear to all of you. Now next amendment is with respect to section 271H. In section 271H, I would directly like to say, earlier there was a limit of 1 year over year. Now they have changed that to 1 month. Check please. If you have your respective books of old books of whichever teacher you have, don't worry. Earlier there was 1 year time limit over here. 1 year time limit. Now they have reduced that drastically to only 1 month. That's it. In 1 month you have to file the TDS or TCS return. In 1 month you have to do everything. Okay. Pay TDS, TCS, pay interest, pay fee, file TDS, TCS return within 1 month. Okay. Then only you will get the relaxation of 271H. Otherwise you are not going to get the relaxation of 271H. I hope it is clear to all of you. Now in TCS there are some small amendments. First one, in 206C1F, that is where you sell a motor car, they have put one exception over here, that if you sell to RBI, then this section is not applicable. If you sell to whom? RBI, then this section is not applicable. This is one of the exception which they have put over here. So this is one of the exception, and the second one is very important. Earlier this 206C1F was only applicable to what? Motor vehicle. Now they have said that any luxury goods, any other luxury goods, put it in the box, any other luxury goods whose value is exceeding 10 lakh rupees, which the government will notify. For example, you are buying what? You are buying a Louis Vuitton bag, which is worth 25 lakh rupees. Then even on that case, I don't know, because whether Louis Vuitton bag is covered or not, I don't know, because the government will notify those luxury goods. The government might notify watches, the government might notify bags, okay, apart from cars. Cars are already covered over here. So a Louis Vuitton bag can come over here, okay, a Rolex watch can come over here, okay, on which the government will tell you to collect TCS at the rate of 1% if the value is exceeding 1 lakh. Now, which are those notified goods? I don't know. This section is first of all applicable from 1st of January 2025. Secondly, it is not yet notified. Government has not notified the goods so far. So as of now, there is no implication of this section unless and until the government notifies the goods. Okay. Again, here if you sell to RBI, then this section is not applicable. I hope it is clear to all of you. Now, I don't think so. Apart from this, there is any other amendment in this chapter. There is one amendment over here in 206C1H. 1H, which talks about where your last year's business turnover is more than 10 crore. And if you sell any goods to any person, then in that case, you have to collect TCS at the rate of 0.1% in excess of 50 lakh rupees. So in this case, a buyer can obtain a lower deduction certificate. Okay. If the buyer says that my income does not come in the taxable limit, he can obtain what? A lower deduction certificate over here. The same way in 194Q also, the buyer has been given the power to, in 194Q also. Which section? 194Q. Just a second. Not in 194Q, in 194R, sorry. In 194R also, the seller can obtain what? A lower or no deduction certificate. Okay. In 194Q, sorry, not in 194R. So with effect from 1st October, the seller can obtain a lower or no deduction certificate for TDS under 194Q. Okay. So in 194Q, the seller can obtain lower deduction certificate. In 206C1H also and in 194Q also, in both the sections, the other person can obtain a lower deduction certificate and can give it to the other person so that the TDS is deducted at a lower rate, TCS is collected at a lower rate. Okay, I hope it is clear to all of you. Now, apart from this, I don't think so there is any other amendment over here. 1 or 2 amendments are there, small amendments, not very important for CA final. I think so. One last amendment is over here with respect to credit for minor. Okay. Claiming credit for TCS of minor in the hands of the parent. So with effect from Jan 1st, 2025, the board is allowed to notify the rules. Again, this is not clarified so far. The government will notify some rules over here. For cases where the credit of TCS are to be given to a person other than collectee. However, credit of TCS of the minor shall only be allowed where the income of the minor is being clubbed with the parent. So The way in case of TDS, the credit of the minor is given to the parent, right? If I open a fixed deposit in my daughter's name, who is a minor, and if she earns some interest, then the TDS credit will be given to me by the bank, because ultimately that income will be clubbed in my hands. The same is the case with TCS also. If there is some TCS in my daughter's name, then that should also be given as a credit to me, because ultimately that income will be credited in my hands. So for that, the government is going to notify some rules, etc. Okay, I don't know what exactly they are going to put in that rules, and what exactly they are going, and when exactly they are going to bring the rules. I don't know. The section is applicable from 1st Jan 2025. Now it is about to start now, the day on which I am recording the amendment. We are almost in the Jan now. So yet the rules are not notified. Okay. So this is a small amendment. And that's it. These are the some of the TDS amendments which are applicable for your May 2025 and November 2025 exams. Okay. Before we compute capital gains, we need to always know the nature of capital asset. What? The nature of capital asset means what? It means whether the capital asset is a short-term capital asset or it is a long-term capital asset. We need to know the definition of both of them. Okay. Now, the definition of short-term capital asset is defined under section 242A. Remember this number. Remember it. Okay. Okay. And the definition of long-term capital asset is 229A. Forget it. What? What I said? Palani? You have to forget. If you don't forget, I'll kill you, Palani. Okay? But what you have to remember? Short-term capital asset, you have to remember, that is very critical definition. Are you clear? Now listen carefully. This is very important. This is very long. This is very long. Short term is long. Long term is short. Okay. Palani. Short term definition is very long. Long term definition is very short. Definition of short term capital asset is very long. Very long. Very long. There are 20 explanations given. How many? 20 explanations. And definition of long term? 2 lines. 2 lines. What is long term capital asset? A long term capital asset means a capital asset which is not short term. Full stop. Okay. So our entire energy will be to understand what? What is a short term capital asset? Okay. Now there is an amendment in this made by our beloved finance minister. If you transfer on or after 23rd July 2024, what was there on 23rd July? What was there on 23rd July, Niveda? Budget. Okay, budget was there. Okay. So, if you transfer on or after 23rd July, the definition changes. And if you would have transferred till what? 22nd July, then the definition was different. Okay. So, as a student, are we supposed to see the new one, old one, or both? Both. They don't have any option. Okay. Now we will see what ICI wants to say. I don't know what ICI will say. ICI material is not there with me as of now. But I think so they will also consider both. Okay. So what shall we see first? Definition of short-term capital asset till 22nd July. Let's see. Shall we start? Definition of short-term capital asset till 22nd July. That is 1 day prior to the date of budget. Okay. Now, what is a short-term capital asset? Read carefully with me, all of you. Short-term capital asset means held by an assessee up to how many months? Up to how many months? Preceding the date of transfer. Preceding the up to 36 months preceding the date of transfer, it is short term. Are you clear? I hope it is clear. Okay. How to compute this date of transfer? How to compute this period of holding? Listen carefully. You have to compute from date of purchase. You have to compute from till 1 day prior to the date of transfer. If I am transferring on 15 December, if I am transferring on, I have to compute till 14 December. Are you clear? Are you clear? Even if you are not clear, we will clear this in some time, okay? Now, there are some assets. There are which will become long term after 12 months. After how many months? After 12 months. Let's see. Listed shares. What? Listed shares. Equity or preference. They will become long term after how many months? After 12 months. They do not require 36 months to become long term. Are you clear? Next, securities like debentures, bonds, government security, etc., which are listed. Okay? They will become long term after how many months? After 12 months. So listed shares, listed security will become long term after 12 months. Are you clear? Units of UTI, unit trust of India. Okay? And equity oriented fund. Which fund? Listed, unlisted doesn't matter. Listed. Both of them will become long term after 12 months. Okay? Zero coupon bond. What? Listed, unlisted doesn't matter, will become long term after 12 months. Okay? So these are the few assets. How many assets we have done here? You can say 5 assets. Units of UTI and equity oriented fund are different assets. Okay? These 5 assets will become long term after how many months? Acha, exact 12 months, what will happen? Short term. Above also exact 36 months, what will happen? Short term it will be. It has to be more than 36 months. It has to be more than 12 months. Are you clear or not? Please tell me. Okay? Now, there are 2 assets. There are which will become long term after 24 months. After how many months? Which are the 2 assets? C. Unlisted shares. Which assets? And land and building. And what? Land and building. That is immovable property. So unlisted shares and immovable property will become long term after how many months? After 24 months. Okay. Now, I have one question to all of you. See on the board. On 15th of April 2022, I purchased the land. And on 15th of April 2024, I sold the land. Is it long term or short term? Tell me. Is it long term or short term? How will you count the period of holding of this asset? From the date of purchase to what? To 1 day preceding the date of transfer till 14th of April 2024. Okay. You have to count 1 day preceding the date of transfer. Always, always, always. So according to that, this is how many days? How many months? Exact 24 months. And if it is exact 24 months, and if it is land, it is what? It is short-term capital asset. Is it clear to all of you? Please tell me. 100%? Okay, fine. Now pay attention, please, all of you. Now this is the definition of short-term capital asset till what? Till 22nd July 2024 if you transfer your asset. Okay. Now what is the change from 23rd July? The government wants to simplify the things. The government wants to. So they have removed the 36 months category. They have removed what? 36 months category they have removed. And they have said everything will be either long term after 12 months or after 24 months. Okay. Now we will see the amendment after some time. First of all, let's see the pre-amendment scenario once again. And I have some question to all of you. The question is, jewelry will become long term after how many months? 36 months. It is not specifically mentioned in 12 months or 24 months. Achha, debt oriented mutual fund will become long term after how many months? Debt oriented. 36 months. Only equity oriented fund is mentioned for 12 months. Correct or not? Are yes or no, Palani? Okay. Painting will become long term after how many months? 36 months. 36 months. Drawing 36 months. Archaeological collection 36 months. Correct? Now, what amendment they have made from 23rd July if you transfer a capital asset? If you transfer a capital asset from 23rd July, what amendment they have made? They have removed 36 months. Only 12 or 24. Okay. Let's see. Let's see. Shall we start? Let's see. Section 242A has been amended. Short-term capital asset. If the capital asset is transferred from 23rd July, that is the day of finance budget number 2024, correct? Now, generally short-term capital asset is equal to held by SSE up to how many months? Please tell me. 24 months. So now the new amendment does not have what? Tell me now, the new amendment does not have what? 36 months criteria. 36 months. It only has 12 or 24. Correct? Correct. Preceding the date of transfer. Long term in the following exceptional cases. First, all listed securities like shares, debentures, bonds, government securities, units pooled by investment vehicle like AIF, etc. What? AIFs, alternative investment fund units. Okay. Even derivatives. Everything will become long term after how many months? 12 months. Okay. All securities, and they have mentioned the word security means as defined in Securities Contract Regulation Act 1956. Have you heard about this act? So if I go to that act, security includes everything. It includes shares, it includes debentures, it includes bonds, it includes units, it includes security, government securities, units pooled by AIF, derivative, all of them are part of what? Please tell me. Tell me now, please. All of them are securities. Okay. And all of them will become, so they have given a reference of what? For the purpose of securities, go to Securities Contract Regulation Act. Okay. And see the definition there. When I go there, I get all these items in that definition. Okay. So all of these, if these are listed, if shares are listed, if debentures are listed, if bonds are listed, if government securities are listed, if the units pooled by an investment vehicle like AIF, etc., if these are listed or derivatives are listed, all of them will become long term after 12 months. Okay. And rest of them are same. Units of UTI, equity oriented fund. 12 months, same. Zero coupon bond, listed, unlisted, same. Correct? And any other capital asset like equity share, preference shares, unlisted. Okay? Land and building, gold, unlisted bond, unlisted debenture, everything will become long term after how many months? So there are only two categories now. Okay? Only two categories. So there is no 36 months category? No. In the entire income tax law, there is no 36 months category. That we will talk about sometime later. Okay? That I am not talking now. Are you clear? Palani, are you clear? So from 23rd July 2024, there is no 36 month category. Okay? Are you clear? So this is how they have categorized all these things. So is the definition prior to 23rd July and post 23rd July clear to everyone? What used to be the position before 2001? Let me just summarize that. Sorry, before 23rd July. Okay. Till indexation is Available on all except what? Except few I will write. Okay. Right or not? Except few. And cost of acquisition will be computed how? As per section 55. STT is not available. Correct? Now, how will you compute cost of acquisition in case of different assets? First, I will ask you, in case of intangible assets, tell me. That depends upon what kind of intangible asset it is. Correct? Alani, if it is your self-generated asset, what will be your cost? Nil. If it is purchase, then purchase price. Okay. Now let me tell you one thing which I have not told you earlier. Option to take FMV on one is not available. Is not. You can check over there also below the intangible asset discussion. Why, sir? Because how will you compute the FMV of your goodwill? Tell me. Suppose if somebody asks me what is the FMV of your goodwill in 2001, how will I compute that? Is it possible to compute? Yes, you can compute for land, you can compute for building, you can compute for jewelry, you can compute for shares. Correct or not? But you cannot compute for goodwill, na? You cannot compute for patent. It's impossible. It's very difficult task to compute. Yes? So this is the first asset. Here the option to take FMV as on 1/4/2001 is not available. Second, what is the cost of acquisition of bonus shares? Tell me. If it is allotted before what? Then you will take cost. FMV on 1/4/2001. Correct? Don't always say nil. If it is allotted on or after what? 1/4/2001. Then it is what? Please tell me. Then it is nil. Is everyone clear with this? Third one. Cost of acquisition of what? Right shares. Okay. So when you renounce the right, what is the cost of renouncing the right? I am renouncing my right to you. What is the cost of that? Arey, I renounce the right to you. The company has given me the right. I am renouncing you. What is the cost of that? It is nil. Correct? And what is the cost of acquisition in the hands of who purchased the rights? Tell me. It is the amount paid for right plus amount paid for what? Shares. Correct? Then what else is there? If I purchase land and building, what is the cost of land and building if I purchase prior to 1/4/2001 and on or after 1/4/2001? What will be the cost of this? Please tell me. Here you have to compare the actual cost with what? Lower of or stamp duty value on what? 1/4/2001, whichever is lower, then compare with what? Whichever is higher. And what if you have purchased on or after 1/4/2001? The actual cost. That's it. Correct? So these are the four assets which are mentioned over here. Correct? Intangible assets, bonus shares, right shares, land and building, and last will come what? What will come in the last? Other capital assets. Correct? For other capital asset, how will you compute the cost? If it is prior to Then what will be the cost? Actual cost or FMV on 1/4/2001, whichever is higher. And if it is after, on or after 1/4/2001, then the actual cost. Will you take indexation after that? Please tell me. Are yes or no? Till 22nd July. In all these cases, you will take indexation, except few cases where indexation is not allowed. Correct or not? Are you clear? Now, one last thing that I would like to say. For cost of improvement, it is allowed as deduction. It is only if it is incurred on or after 1/4/2001. When any cost of improvement done before 2001, before will not be allowed. It's very logical also. For example, see here. In 1990, I purchased a bungalow. What I purchased? Of 1 floor. How many floors? In 1995, I made one more floor. Okay. So total how many floors now? Now, when I take the FMV of the house on 1/4/2001, will it include both the floors? So why should I include the cost of improvement before 1/4/2001? It is included already in the cost of the FMV of the asset, na, correct or not? Okay, so don't take the cost of improvement incurred when? Before 1/4/2001. Okay. Now, this is the position till 22nd July. Is everyone clear till 22nd July? Please tell me. Is there any doubt in your mind? Now, the government is saying that we want to simplify the things. We want to, therefore, from 23rd July 2024. Okay. No indexation is available on any asset. Full stop. Rest all will be same. All this will be same. All 5 points will be same. Palani. All these points are same only. Yeah? How will you compute the cost in case of intangible asset? Tell me. Self-generated nil purchase price. How will you compute cost in bonus shares? Nil, and after 1/4/2001 nil, before 1/4/2001 FMV. How will you compute cost of right share? Same. Land and building same. Other capital assets same. We are not changing all those things. What are we changing is no indexation will be available. Okay. But by removing the indexation, we are also giving you one tax benefit. Okay. Till 22nd July, till long-term capital gains under section 112. Long-term capital gains under section were taxable at 20%. How much? Now we will keep the long-term capital gains at how much? 12.5%. How much? But no indexation. No indexation on property, no indexation on jewelry, no indexation on shares, no indexation on debentures, no indexation on any item. No indexation on capital index bond, no indexation on sovereign gold bond, nothing will be allowed as indexation. For ease of calculation. Is it good for you or bad for you? Alani. And for examination it is good. I am not talking from examination point of view. Niveda is saying for examination it is good. I am not talking from examination's point of view. I am talking from practical point of view. Tell me. Is it good or bad for you? Think on it. You have a lot of time in life. Okay, till then I'm searching something. Let me search. Tell me please, why it is bad? Every year I have inflation of around 7 to 10%, sir. It is bad, sir. I should get the benefit of indexation, sir. Okay. Now it all depends upon case to case. You cannot say one-sided, it is bad or it is good. Huh? For example, Palani, take your calculator. Suppose you have purchased a property in 1980. 19 for 1 lakh rupees. For, don't write anything. For how much? 1 lakh rupees. Now the market value of that property in 2001 is 10 lakh. How much? 10 lakh. Okay. Now you are selling in the year 2024 after amendment. After amendment, you are selling for 3 crore rupees. How much? 3 crore rupees. Okay. So let's do the calculation as per old provision first. Okay. If we get the indexation, then the cost is 10 lakhs because FMV on 1 for 2001 is 10 lakhs. Multiply that by 363 current year indexation. Are correct or not? And divide by 100. How much it comes to? 36 lakh 30,000 is your index cost. Correct. Minus 3 crore is your sale consideration. How much is the gain? 2 crore 63 lakhs will be your gain. Take 20% tax of that. Ignore surcharge and cess. 52 lakhs is your tax coming, Niveda. Have you done the calculation correct? Tell me please. 10 into 363 divided by 100. Minus 3 crore. Into 20. 52.74 something is coming. This is if you take indexation, correct? Now let's not take indexation. 300 minus 10. 290 and into 12.5%. How much it comes to? This is beneficial, Palani. Now you cannot say one-sided that this is beneficial, that is more beneficial, this is not. Okay. It all depends on case to case. Okay. It all depends on case to case. Now take another example. Say 5 years back. When? Say 5 years back you bought a property for 1 crore. That is 100 lakhs. Okay. And now you are selling it for what? 120 crores. 120 lakhs. Okay. So will you get indexation? And 5 years back you bought for 100 crore. Now you are selling for how much? 120 crore. Okay. Now suppose if we get indexation, suppose. Okay. Then I will multiply by 363. And let's see the indexation table. Let's go to the website of the government. Check here. Say 5 years back, what was the indexation? Say it was 1920, it was 289. Okay. So let's divide by 289. How much is the cost? And we are selling for how much? So is there a loss? Now this, if I don't take indexation, will there be a profit of 20 lakhs? Tell me now. So on that profit, am I supposed to pay 12.5% tax? So this is not beneficial. Okay, here indexation is more beneficial. It all depends upon case to case, Palani. Correct or not? Now, I'll show you something. See, on the date of budget, I have mentioned this particular thing on my LinkedIn post. What I mentioned, see. Read Palani louder. See the memorandum. What is written in memorandum? No, don't read that. That is very big. So, was there a lot of outrage by the citizens of this country? Was there an outrage by the people of this country after the government removed what? So, in the Finance Act, on 8th August, the government exactly said the same thing what I wrote in that particular budget, in that particular post. Read now. Shall we read? Generally, long-term capital gains under 112 will be taxable at, after the amendment, it will be 12.5% na? Without indexation benefit. If transfer takes place on or after 23rd July 2023, say new regime. Now, in this capital gains also there is new regime, old regime. Okay. And 20% with indexation if transfer takes place prior to, say, old regime. However, in the case given below, an assessee has an option. What option they are giving? Palani. They are listening to us here, Palani. I was very happy that day. I don't know whether they have listened to me or it is a coincidence. I think so 90% is a coincidence only. The assessee has an option to pay old regime or new regime, whichever is. But to whom? But to whom? Let's see the conditions. Shall we? Only to circle in your book. Only to resident individual and HUF, not to everybody. Okay? Now resident individual and HUF has two options. Let me go ahead. Long-term capital gain arises on transfer of building or both. See, I also mentioned immovable property. Correct? Now, listen, very important. This land or building may be residence, commercial property, any property. Okay? They are giving this option in both the cases. Okay? Commercial as well as residential, and to which assessee? Resident individual HUF. Plus, asset was acquired when? If you acquire asset now, do you have two options? Indexation gone. Okay. This option is only for which assessee? All those who have acquired the asset before the budget. Are you clear? And if the asset is transferred when? After the budget. Are you clear? Then you have two options to pay tax under old regime, new regime. Option 1, pay how much? Without indexation. Okay. And pay with indexation. Okay. Read this. Read this. Are you clear? This is just a further clarification, which is also mentioned above. Correct. Plus, no impact on other provisions. All other provisions which I have taught you now will remain same. Like this. The how to compute FMV on 1/4/2001. In case of this, that capital gain exemption will be available. Then this everything is same. Are you able to understand or not? Only what will change? Only what will change? Indexation is no longer available. You have two options. Only in case of one case. Only in one case you have two options. Correct? Now, I made a chart over here for you all. See here. Shall I? Shall I explain this chart? Status of if long-term capital asset is transferred till 22nd July. Okay. Indexation is available on all assets except few. Except few, the list will continue. Okay. Now, what is the tax rate? What is the tax rate? Okay. The tax rate is 10% in 112A. I have not taught this section so far to you all. What is 112A? That stock market wala section. Everybody knows na yaar. In 112A it is how much? With 1 lakh exemption, that everybody knows na. Now, and 112 it is how much? 20% tax in maximum cases, and in one case it is 10%. That we'll see later when we talk about 112 section. Okay. Now, what about from 23rd July 2024? Indexation is on any law except one case. What is that one case? Land and building purchased, land and building sold, then 12.5% without indexation, 20% with indexation. Are you clear? What are the tax rates in the new law? I will tell you. In 112A also they have increased to 12.5%. They have streamlined all the rates at 12.5%. Are you clear? So 10 has become 12.5 and 20 has also become 12.5. Correct? Are you clear? But here they have given one exemption also. See, for 12.5, they have also increased the exemption from 1 to 1.25 lakhs. Are you clear? We are going to do all these sections. Don't worry. 112, 11111A, 112A, all those things. But I'm just making a master chart for you all. Okay. And in 112, the tax rate has become how much? 12.5% without what? Indexation. So in one case, you have these two options. Correct? In all the cases, what are your status? No indexation. 12.5%. Okay. And 112A case, stock market case, you will get 1.25 lakhs exemption. Okay. Now, if you want to write down, you can write down this. Okay. You copy this somewhere, otherwise you will not remember. I'll keep it big only so that you are able to see. Now, out of this chart, even if you are not understanding something as of now, don't worry. Over the time, when we will learn, we will understand everything. Don't worry. Rani, done or not? Rani, Murinda too. Murinda too? I'll scroll this. Now after this, I will tell you a very interesting thing. After giving this option, what interesting thing that they have said. I'll tell you one very interesting thing after this. You should tell me, Morintatu. You should teach me, yeah. I'm learning this. After the batch, I'm going to be full-time learning Tamil. Done. Now I am showing you some very interesting fact now. See. Shall I say? So is the government rolling back the indexation for some people? Yes. Who is the person for whom the government is rolling back the indexation? Resident individual HUF. Okay, doing what? Resident individual HUF further what? Purchase land and building. Before what if they have purchased in 1990, then what will you do? Take all those provisions are same only. Take FMV, stamp duty value, all those things are not changed. Are you clear or not? Now check here please. Issues with respect to what? Mr. A purchased a building for 10 lakh in 2002-2003. He is a resident. He sold the building on 15th August. Whether new provision will apply? Yes, 15th August, new provision will apply. Correct? Now the cost inflation index of 2002-3 is 105 and 24-25 is 363. The selling price is 40 lakhs. Okay. Now does he have all the options? Is he fulfilling all the conditions of rollback indexation? Yes. Option 1, 40 lakhs minus 10 lakhs directly 30 lakhs. 12.5%. Okay. Plus 4% cess also. Correct. Option 2, 40 lakhs minus index cost of acquisition. Correct. That is coming to 5,42,000 and the answer is coming to 1,12,000. Which one should you opt for? Should you opt for the old provisions with indexation 1? Yes, the government says excess should be ignored. Okay. How much excess he is paying? 277,090. Pay 1,12,910. That is as per the old law. Correct? Now, suppose in the above example, selling price is 30 instead of 40. Okay. Selling price is what? Option 1, let's see. 30 minus 10 will be 20 lakhs. On 20 lakhs, he will pay 13% tax, 12.5 plus 4%. So in option 1, the tax is coming how much? Now listen carefully. Open your eyes and listen. Open your ears and listen, not eyes. Okay. Open your ears and open your eyes wide and listen what they are saying. They are not going to give you any benefit so easily in life, huh, Palani? Option 2, sale price is how much? Index cost of acquisition is coming 34.57. So there is a loss. Which is more beneficial? Now, the government says that in option 2, if loss is coming in, don't pay any tax. Don't pay. Don't pay. Don't pay. But we will not allow you to carry forward the loss. Did you understand what I said? We will allow you the old option. We will. But under the old option, if the tax is coming less, pay as per the old option. If the tax is coming more, pay as per new option. But under the old option, if there is a loss which is coming, if there is a lapsed, are you able to understand or not? Check this. Did you understand? Very dangerous people. Okay. Understood? Then copy both these examples. In example 1, we are getting profit. In example 2, we are getting what? Loss. After this, you will be expert of what? The capital, not capital gains completely, at least of this amendment. Shall I change? Scroll this much? Much is fine, na? Done or not? Shall I scroll? Next one. Second example, do yourself. Just change the selling price to 30 lakhs. Okay. Are you done? Are you done? So all other amendments, provisions will remain same or not? How to determine the cost of bonus shares after this amendment? Same. How to determine the cost of land and building acquired before 2001? Same. How to determine the cost of jewelry acquired before 2001? Same. Everything will remain same. Only indexation they have removed. Okay. Alani, written or not? This is done. This is done. All this is done till here. Okay. Now this is not done. This we will do after some time. Okay. So this is what the amendment is all about. I hope you all have understood the amendment. Correct? Yes. Alani? Now I want you all to come to the textbook, please. And in textbook there are the CBDT has given some frequently asked questions, FAQs, after the amendment. Listen. CBDT has given what? Some FAQs. Listen, what is the timing of this FAQ? The timing of this FAQ is immediately after budget. When? So immediately after budget, have they rolled back? No. So this is the time when they gave this what? FAQ. So let's see. What are the major changes brought about in the taxation of capital gains by Finance Act, Finance Bill number 2? So have they changed holding period? Tell me please fast. Only 2 holding period now, 1 year and 2 year, correct? Rates have been rationalized. Are the rates of tax has been rationalized or not? 12.5% for everybody, correct? And made uniform for majority of the assets, correct? Indexation has been done away. Indexation has been done away. And rate has been reduced for what? See, in their FAQ they are saying that parity between resident and non-resident, and 10 days after that, when they brought the Finance Act, they gave indexation to resident. Are you clear or not? They themselves don't stand on their points. Okay. Are you clear? So is there a disparity or not between resident and non-resident? No change in rollover benefits. What is rollover benefits? That is the exemptions under 54. Those are called as what? Rollover benefits. What is rollover? You sell one, you buy one, you sell one, you buy one. Correct? Palani, rollover or not? Yeah. What is the date when the new taxation provision come into force? You tell me the answer. I am reading the question. 23rd July. Okay. How has the holding period simplified? Tell me the answer. 36 months is removed. Only 12 and 24 months. Okay. 1 year and 2 year. Correct? Who will benefit from the change in holding period? Who will benefit? No. Who will benefit from change in holding period? Only those people who were earlier covered in 36 months. Correct? Like jewelry. Jewelry will benefit or not because of change in holding period? Yes, because now jewelry will become long term after how many months? 24 months. Are you clear? What about the holding period of immovable property and unlisted shares? That will remain same at 24 months. Correct? Yes. That will remain same only, na? Now please elaborate on the change in the rate structure for STT paid capital asset. That means listed capital asset. What is the rate change for listed capital asset? Listed capital asset which are covered in 112A. What is the rate change for them? It has gone up to 12.5%, but the exemption has also gone from 1 lakh to 1.25 lakhs. Correct? Yes. So this question talks about this, and next question talks about the exemption increase. Okay. What is the rate change for other long-term capital gains? It has reduced from 20 to how much? 12.5%. Are you clear? Please tell me. Who will benefit by the change in rate from 20% to 12.5%? Some people will benefit, some people will not. Correct? Yes. Can taxpayer continue to avail the rollover benefits? Yes, why not? In which assets can the long-term capital gains be invested? All assets? All? What is the amount up to which rollover benefit is available? There is no limit except one section where there is a limit of 50 lakhs. Correct? 50 for EC bonds. Now we have not done all these things. Whenever we will do, you will appreciate all these points. Correct? Now what is the overall rationale for the change? Why they have made so many changes? For simplification. Okay? Are you clear? There is no other rationale. Okay? Now let's talk about 50AA. Pay attention please. What is 50AA? Now you can see a lot of greenery over here. Okay? Now what exactly is this? So let me tell you. Pay attention please. What is 50AA? 50AA has been brought by Finance Act 23 only. It is a very newly inserted section. Very new. It has come just last year. It is not a very old section. Okay? Last year only they have introduced this. 50AA covers two things. One is specified mutual funds. Okay? And second is market linked debentures. Now these are the two things which are covered in the provisions of 50AA. Now listen carefully please. Let me tell you the provision, broad aspect of the provision, then I will get inside the section. The law says that if you have a specified mutual fund or if you have a market linked debenture. Sir, what does specified mutual fund covers? So there is a specific definition obviously for that, because the word specified mutual fund is not a general term, na? Yes? Yes, Palani? It is not a general term. It has to be defined by the law. Correct? So the law has defined that. Don't worry. So what does it cover? So it mainly covers dead mutual fund. Which mutual funds? Dead mutual funds. So it is a dead mutual fund, but definition I will see in a while. Okay. So for specified mutual fund, I can say it is a dead mutual fund. What is market linked debenture? So market link, it is an amendment made by Finance. It is a new section inserted by FA23 last year. Now, what is market link debentures? These are certain debentures which are linked to certain markets. Like these are debentures which are linked to market index. Say it is linked to Nifty. It is linked to Sensex. It is linked to certain other bank Nifty. Okay. So what do you mean by this? It means that if you buy this debenture, if the Nifty increases, the value of this debenture will increase. If the Nifty decreases, the value of this debenture will decrease. Okay. So it is linked to a market index. And in this debenture, if you buy this, you don't get any money till maturity. And the tenure of this debenture is approximately 12 months to 60 months. So if you buy, it may get redeemed in 12 months or it may get redeemed up to 60 months. Okay. So if you buy these two things, one is specified mutual fund or second is market linked debenture. Finance Act 2023 has brought a new section 50AA, and unfortunately Finance Act 23 has said that last year that these two assets will always be short term. These two assets will always be what? Short term. That's it. I don't want to say anything beyond this. If these two assets are always short term, the gain coming out of this will always be what? Short term capital gains. Therefore, will you get indexation? The answer is no. Okay, I'm talking about before 23rd July. After 23rd July, so we don't get indexation on what? On any capital asset, whether long term or short term, forget it. Except one case which we know. Correct? After 23rd July, there is no option of capital gains, na? Correct or not? So therefore, it is about what? I'm talking about pre-23rd July case. Okay. So this asset will always be short term. So how will we compute the capital gains? Very simple. The way we compute for everybody. Full value of consideration minus expense on transfer minus cost of acquisition. That's it. Sir, whether we will get the deduction of STT obviously not allowed. Are you clear? STT not allowed under any circumstance. That is not allowed to others also. Forget about you. Okay. Now, there are some amendments which are made now by whom? Finance Act 24. Okay. 24. There are two amendments. One amendment is not relevant for me. Why? Because that is applicable from AY 26-27. From when it is applicable? AY what? 26-27. And we are computing income for which year in our exam? AY 25-26. Correct? So that amendment is not relevant for us. Just because it is done by the government, I have put it, but not relevant for exam. Second amendment is applicable from 23rd July itself. Okay. Second amendment is applicable from when? 23rd July. So what they have done, sir, in second amendment? In second amendment, they have now included two more things under this section from 23rd July. Check this. What they have included? The specified mutual fund would include now what? Unlisted bond and unlisted debenture from 23rd July. Are you clear? Please tell me. Which redeems or matures what? On or after 23rd July. Okay. Are you clear? So now the scope of this section has been increased. Now you will say me as a student, sir, why they have done this? Anyways from 23rd July, what? Tell me now. Anyways from 23rd July, indexation is not available. Correct? So indexation was not available earlier also on bonds and debentures. We know that, na? Correct or not? Even before 23rd July, was indexation available on bonds and debentures? Tell me. No. Then what is the point of putting these two items here? Can you please tell me? What is the logic of putting here? What is the logic? Anyways, unlisted bonds, unlisted debentures were not subject to indexation. The logic is, if this is kept there, if this is kept, not kept here, okay, and if it is kept under the general provision, Alani, are you listening? Then indexation is obviously not available even before 23rd July. Even after 23rd July, indexation will not be available. But if it is transferred, say after 24 months, if it is transferred after how much, how many months, then the gain will become long term now. Are you clear or not? And they will be subject to lower tax rate of 12.5%. Are you clear? Now, by bringing here, what will happen? It will be short term, and short term capital gains will be taxed at normal rates. Correct? Are you able to understand? Now, to make them bear the burden of higher tax rate, are you clear? The government have put them over here. Did you understand what I said? Please tell me. Now, this is one amendment which is relevant for our exam. Okay, you can write down over there. This is relevant for us. Okay. Now, the second amendment which they have done, it is applicable from when? From check AY 2627. Okay. Now, this amendment is not applicable for our exam, but because it is done by Finance Budget 24, I have put in your books. Okay. Now, what is the second amendment? They have changed the definition of specified mutual fund slightly. Okay. What they have changed, Palani? Now, what the specified mutual fund definition for AY 24 and 25-26. Is this applicable for our exam? Tell me now, please. So, now, obviously, this section came last year. This section came. So, this was the first year. Correct. The second year is our year. Correct. The third year amendment came, that is not applicable for us. Correct. So, we should focus here, not here. Okay. So, let's see what is the position today. When a fund will be called as what? Specified mutual fund. When a fund will be called as? Tell me. Specified mutual fund. If the mutual fund has invested not more than 35% of its total proceeds in equity shares of the domestic company. Okay. I am a mutual fund. If I need to become a specified mutual fund, if I have 100 rupees. Okay. Okay. Then I should not invest more than 35 rupees in what? Domestic company's equity shares. Okay. Are you clear? So I should invest, say if I 34 rupees is invested where? Equity shares of domestic company. 34 rupees. And 66 rupees I might have invested anywhere. Are you clear? Are you clear or not? Then I can become what? Specified mutual fund. Now they have changed this definition slightly. I have a question to all of you. Don't read anything. Listen to me. 30 rupees I have invested in equity shares. Okay. And 70 rupees I have invested in exchange traded funds. What I have invested in? Exchange traded. What are exchange traded funds? Are you aware of that? ETFs. Or fund of fund. What are fund of funds? FOF. They invest in another mutual fund. Okay. So please tell me, Palani. I have 100 rupees. Okay. 30 rupees is in equity shares. Okay. And 70 rupees is in fund of fund. Is in what? Which invest in another fund. And that another fund invest in equity shares of domestic company. Okay. Are you clear? So will I be coming on the left hand side? Tell me now please. 30 rupees is in equity shares. And remaining 70 is in a fund. Is in a which invests in another fund. And that another fund invests in domestic companies equity shares. Will I be coming on the left hand side? The answer is yes. Because the law says what? Out of 100 rupees, you should not invest more than 35 in equity shares of domestic company. Am I investing more than 35 in equity shares of domestic company? Are Palani, listen to my question for the third time in live. Okay. I have 100 rupees. I have 100 rupees. 30 rupees I have invested in the equity shares of domestic company. 70 rupees I have invested in fund. That fund is further investing somewhere, and that further fund is investing in equity shares. Am I coming on the left hand side here? To come on the left hand side, what is the criteria? Not more than 35 should be in equity shares of domestic company. Now, how much is there in the equity shares of the domestic company in my example? How I will write 30 rupees I am investing in equity shares of domestic company. 70 rupees I am investing in a fund that invests in another fund, and that another fund is investing in equity shares of domestic company. Am I fulfilling the left hand side? Tell me loudly with confidence after asking for the fifth time. Am I fulfilling this? Yes? Yes. So the emphasis is on what? The emphasis is on investment in what? Equity share. That should not be more than 35. Okay? Are you clear or not? Are they talking about remaining 65? Where it should be invested? No. Are they talking about remaining 65 where it has to be invested? No. The remaining 65 may be invested anywhere in the world. Correct? Yes or no? Now they have reversed the situation. Okay. How they have changed? The mutual fund which invest what? More than 65 of its total proceeds in dead. They have reversed the situation. You have to invest what? More than 65 in dead. Are you clear? Not up to 35% in equity. Are you understanding or not? So you have to invest more than 65% in what? In debt instruments or in money market instrument, or in a fund which invests 65% or more of its total investments in what? Money market instruments. Are you clear? So the things have changed now. Earlier we need to check what? Equity shares. Now we need to check what? Investment in debt and money markets. Okay. So you have to check the reverse situation now. Now if you have 100 rupees, okay, Palani, if you have 100 rupees, okay, and if 30 rupees is invested in equity share, okay, and 30 rupees is invested in a fund which invest in equity shares, okay, 30 rupees is covered in what? Which invest in equity shares, and remaining 40 is invested in what? Debt mutual funds. In what? Remaining 35%, 40% is invested in debt. Again, I am giving you the breakup. Huh? I am writing on the board. Otherwise, you will not understand what I am saying. 30% is in the equity shares. 30% is in what? I am again writing. 30% is in equity shares. Okay. 30% they are investing in debt. They are investing in what? Debt. And 40% they are investing where? Say in a fund, say which invest in equity shares. Which invest in what? Equity share. Now think and logically tell me. Am I covered here? Yes, because here it is very simple. More than 35% should not be in equity shares. Correct? Am I covered here? Not covered. Here they want more than 65% either in debt or in a fund which invests in debt. Okay, this is not covered there. Are you clear? Therefore, the definition is slightly changed over here. Are you clear? Please tell me. But not relevant for us. For us, we need to remember this only. Forget this. Okay, even if you don't understood this, it's okay. It's better you don't understand this. Okay, you only see the left hand side. Is it clear? Now, what is the tax? How will the computation will be done? It's very simple. Check. Yes. Computation is very simple in this case. ठीक है? Are you clear? So in how many cases so far we are not getting indexation till 23rd July also? Tell me. Bonds and debentures, 112A assets, then first proviso to 48. Correct? Non-resident investing in bonds, shares, debentures in foreign currency. Correct? Even there it is not allowed. Are you clear? Okay, fine. So let's move on to the next amendment, which is on page number 17.16, which is under section 47, that is non-taxable transfer. Now in non-taxable transfer, there is an amendment in point number 2 over here, that if you give any gift to anybody, it is non-taxable. If you give any asset under will to anybody, it is non-taxable. And if you give under an irrevocable trust means where you will not ask back for the asset. I'm giving an asset to somebody for a very long period of time, then it can be called as an irrevocable trust, irrevocable transfer. If you give an asset by way of gift, by way of will, or by way of irrevocable trust, then it is exempt. But now they have made an amendment. They have made an amendment that it is exempt only if it is transferred by individual and HUF. Now what do I mean by this? I mean that if a gift is given by a company or a firm or an LLP, then it will be taxable now from this year onwards. From assessment year 25-26, previous year 24-25. If the gift is given by a company or a firm or say it is given by an LLP or a cooperative society or an AOP-BOI, then it is taxable, because now this point is only applicable to whom? This exemption is only applicable to individuals and HUF. I hope it is clear to all of you. Okay. Now, let's move on to the next amendment. The next amendment is in section 10(4)(d) in the definition of specified fund. So they have made some additions in the definition of specified fund over here. Earlier, specified fund means a fund established in India which has been granted a certificate as category 3 AIF. This was considered to be what? A specified fund for the purpose of section 10 clause 4D. But now the definition of specified fund also includes a trust or a company or an LLP or a body corporate who has been granted a certificate as a retail scheme, or an exchange traded fund ETF under IFSC Act. So there are two more people apart from category 3 AIF. Apart from the category 3 AIF, there are two more people who are added to the definition of what? Specified fund. One is a retail scheme under the IFSC Act, or second one is an exchange traded fund under the IFSC Act. So these are the two people which are added over here in the definition of what? Specified fund. Okay. Now next amendment. Next amendment is in section 112A, that is the tax rates for long-term capital gains on certain assets. Now in 112A, the tax rate earlier was 10% subject to 1 lakh exemption. Okay. But from 23rd July 2024 onwards, if a transfer of a long-term capital asset is made on or after 23rd July 2024, then the capital gains will be taxed not at 10%, but it will be taxed at 12.5%. 12.5%, but the exemption limit is also increased from 1 lakh to 1.25 lakhs. So it's a very small amendment. If a transfer takes place prior to 23rd July, you will get 1 lakh exemption and 10% will be taxed in excess of 1 lakh rupees. This is the old amendment, old provision. But if the transfer takes place on or after 23rd July, that is the date of budget. We all know that from the date of budget, the government has changed the rates of capital gains. So if a transfer takes place on or after 23rd July 2024, then first of all you will get an exemption of 1,25,000 rupees, and then you will also get what? You will also get, after exemption, you will be liable for capital gain tax of 12.5% instead of what? Instead of 10%. Sir, what will be the total exemption in the entire year? The total exemption in the entire year will be not more than 1,25,000. Suppose some assets are transferred here. Some assets are transferred before 23rd July and some assets are transferred on or after 23rd July. Then there is a doubt which can come to assessor's mind. Will I get 1 lakh plus 1,25,000 exemption? That is 2,25,000 exemption. The answer is no. The aggregate exemption in the entire year will not exceed what? Will not exceed 1,25,000 rupees. That is something which is very clearly written in the law. They have mentioned that in the Income Tax Act section 112A itself. Okay. So this is a small amendment which is there under what? 112A. Now the next amendment in 112A is with respect to grandfathering clause, which talks about determining the FMV of the shares on 31st Jan 2018. Now we all know that we need to determine the FMV on 31st Jan 2018 and then compare that with the sale consideration, and then whichever is lower, that will be compared with the cost of acquisition to determine the cost of the shares. Now in that there are some amendments, small amendments, clarificatory amendments have been made. Suppose the share is not listed on 31st Jan. Is it possible? The answer is yes. The share is not listed on 31st Jan or which became the property of the assessee in consideration of share which is not listed on such exchange on 31st Jan by way of transactions not regarded as transfer under section 47. So the share in short is not listed on 31st Jan. If the share is not listed on 31st Jan, then what shall I do? But listed on such exchange subsequent to the date of transfer. Subsequent to the date of transfer, where such transfer is in respect of sale of unlisted equity shares under an offer for sale to public included in IPO. Now, what is exactly this particular case? Let me explain you. Okay. Suppose on 31st Jan 2018, the shares are not listed. Okay. Now, if it is not listed, then how should I determine the market value of that particular share? It is not possible for me to determine what? The market value of that particular share in that case. Then in that case, what shall I do? It is very simple. The share is not listed on 31st Jan, not listed. But later on, is it listed? Later on, it is listed. Then you do only one thing. You take the cost of acquisition of the shares multiplied by 2017-18 indexation. What was the indexation of 2017-18? It was 272 rupees. Divided by the indexation of the year in which you have acquired the shares. Suppose you have acquired the shares in 2001-2002. In that year, what was the indexation? The indexation in that year was 100. Suppose the shares were acquired in 2002-2003. In that year, what was the indexation? In that year, the indexation was 105. So see, you have to just see one thing. On 31st Jan, the shares are not listed. Later on, it got listed. On 31st Jan, if it is not listed, you only do one thing. Take the cost of acquisition of the shares, multiply that by the indexation of 2017-18, that is 272, divided by indexation of the year in which you have purchased. And whatever value will come, that will become your FMV for the purpose of what? For the purpose of this step 2, for the purpose of determining the grandfathering clause. Okay, I hope it is clear to all of you. So this provision was there earlier also, but now they have clarified in a better manner through Finance Act 2024. Now, next one is 111A section also. They have amended the rate. In this section, the rate was 15%. But unfortunately, if an asset is transferred on or after 23rd July, then the tax rate has been increased to how much? It has been increased to 20%. So earlier it was 15%, but now the tax rate has been increased to how much? It has been increased to 20%. Okay. Now in exemptions, there are no amendments in exemption. Exemption is very straightforward. In demerger, there is no amendment. In amalgamation, there is no amendment. In ESOP, there is no amendment. Okay. So there is no amendment. There is only amendment in buyback now. So we will do buyback now. Okay. Let's today now learn the treatment of buyback of shares by the company. What will happen if there is a what? Buyback of shares by the company. Now, there is a very big amendment here also. What is that amendment exactly? Issue in with logic about the amendment. Why this amendment has been brought by the Government of India. Shall I start? Shall I start? Now, buyback. Till 30th September 2024. From 1st October 2024. Okay. Now, what was the treatment till 30th September 2024? There is a company. There is a shareholder. Now, suppose if the company is buying back the shares, company is paying the amount to the shareholder. Okay. Shall I say? In this case, suppose listen carefully, it's a very beautiful discussion. Suppose the shareholder has bought the shares for say 100 rupees. How much? 100 rupees. And the company is buying back for how much? Say 300 rupees. How much? So company will pay how much to the shareholder? Company will pay 300. So the tax implication was till 30th September. There is a separate section by the name called as 115 QA in the hands of the company, and the company will have to pay tax. Company will have to pay what? Pay tax. How much tax? 20% tax, 12% surcharge, 4% cess. That comes to how much? Please tell me. 23.296. Correct? So company is going to pay tax at the rate of 23.296 on what? On the difference of this. What is the difference of this? That is on 200 rupees company will pay tax. Okay? Is it clear? Then what about shareholder? Shareholder exempt. Shareholder exempt. There is no need to pay tax on such amount by the what? By the shareholder. Shareholder is not liable to pay tax on that. Is this clear to all of you? Please tell me, all of you, first of all. Clear? Now, people started misusing this. People? Sir, how, sir? How? See, instead of this, what are the ways to get the money from the company by the shareholder? Please tell me. I am a shareholder of a company. I want money. What are the ways in which I can get the shares? In which I can get the money from the company? Tell me. If I take as a loan, then it is a deemed dividend. Forget it. Okay. Dividend is the only way. Okay. I can take in the form of dividends. Now suppose if I take in the form of dividends 10 crore rupees. How much? How much tax I will pay on that? 30% tax. Surcharge also? Cess also? Around 40%? But if I do the same thing in the form of buyback, how much tax effectively it is going to the department? 23.296. That's it. That is the catch. Are you clear? Understood or not? So now we will learn first of all till 30th September what is happening. Then we will see from 1st October what is going to happen. Okay. Shall we see? So till 30th September, first of all, everyone tell me, where is the tax implication? The tax implication is in whose hands? Company's hands. And the shareholders are exempt under section, let me tell you the section number 10, clause 34A. Which clause? 1034A. Are you clear? Now, let's see the treatment till what? Till 30th September 1st. Come here. Taxation of buyback of shares in case of a what? Domestic company. Treatment of buyback of shares by domestic company till 30th September. For shareholder, it is exempt. For company, it is 23.296. This is called as distribution tax. Which tax it is called as? Distribution tax. On what amount it will be imposed? It will be imposed on the distributed income. Okay. Now, on how much amount the company will pay tax? Whatever company is paying you. Okay. In my example, 300 rupees. Right? Minus what you have paid to the company on issue of shares. Right? But, listen carefully. I am a company, you are a shareholder. On what amount I will pay tax? Whatever amount I am paying you minus what you have paid to the company while purchasing the shares. Okay. Now, coming back to the discussion. Maybe not very important for us, this one. Yes. From 1st October, what is going to happen? Maybe that is very, very important for us. And expect one question on that in the exam. 100%. 100% one question will come on that in the exam. In your examination. Very important amendment it is. Again, we will try to find out what is the loophole in this. What is the loophole in this? What is the loophole? What is wrong in this? Instead of taking the money out of the company in the form of dividends, shareholders are doing what? They are taking the money in the form of buyback of the shares. Correct or not? They are not taking dividend. They are taking buyback. Because if they take dividend, they have to pay at least 30% tax. Correct? About 10-15 lakh rupees. Correct or not? But in buyback, the effective tax rate is only 23%. Correct? So what is the amendment from 1st October? Listen carefully. From what is the amendment? This is a company. This is a company. This is a shareholder. Suppose the shareholder bought 100 shares at rupees 1000 each on 15th of December 2024. 15th of December 2015. Okay? Okay. Now, say on 10th of October 2024. Okay? The company paid. The company bought back. Bought back how many shares? 50 shares. Okay? At rupees 300 each. At rupees 300 each. So how much the company will pay to the shareholder? Tell me. 15,000 rupees shareholder will get. Okay? Now what is the treatment till 30th September? Till 30th September, this is 3,000, sorry. This is 3,000, not 300. 300 is too less. Yes? This is 3,000, therefore this is 1,50,000. Correct? So first of all, everybody will tell me what will happen till 30th September. 3,000 minus 1,000 into 50 shares. Into 50 shares, company will pay tax 23.296. Correct? 115 QA removed. 115 QA removed. Now the government says, with effect from whatever amount is paid by the company, whatever to the shareholder, on account of what? On account of buyback of shares. How much money is paid by the company to the shareholder? 1,50,000. Correct? That will be deemed dividend. That will be deemed to be dividend under section 222 clause F. Did you understand what I said? Entire 1,50,000, whatever is received is deemed dividend. Yes. That is deemed dividend. Understood? Alright, tell me now fast. Second tax treatment. The company will deduct TDS under 194. Under which section? Under 194. We have not done the TDS section of dividend so far. Tomorrow we will do. Okay. But today only I am telling you because deemed dividend concept is coming today itself. The company will deduct TDS on what? On 1,50,000, the company will deduct TDS at the rate of 10%. if paid to shareholder, if paid to resident shareholder. Okay, if paid to which shareholder? Resident shareholder. Now, you will ask me one question. You can ask one question over here. This is very wrong, sir. Yes, the shareholders have paid 1,000 rupees na earlier. What about that? Yes. Think logically. Think on yourself. Then you will understand what is the problem over here. We are not getting any exemption of the cost. Correct? Here you are getting an exemption of the cost. Are you getting any deduction of the cost here or what? This is directly taxable 1,50,000 rupees. No deduction of any expense under section 57 under IFOS. Directly taxable 1,50,000 rupees. You will say it is wrong. Yes? It is wrong or not? Don't worry. We will do something. The government has made a provision. Deemed dividend, everybody understood? Now, they have revived a new section. They have what? 46A. This was there earlier also long back. Before 2013 it was there. Now they have revived. They said that now you need to compute your capital gains also. What you are supposed to compute? Capital gains. What is the FVC? Government said that put FVC nil. How much? Always nil. Capital gains for whom? For the shareholder. Take FVC as nil. Okay? Understood? Shall I go ahead? You will understand everything in 5 minutes. Wait. Minus. What is the cost of acquisition? 1,000 into 100. 1 lakh rupees. Correct? You reduce that. That will give you loss. Correct? LTCG, STCG, whatever it is. In this case, it is LTCG because it was 8 years old. Correct? Correct. Niveda. So, they have given a mechanism to compute capital gains here. Once the buyback is done, take the FVC nil always. Okay? Once the buyback is done, have you paid tax on 150? Now we will give you the benefit of 1 lakh rupees in capital gains. Don't worry. Okay? Now, how much is buyback over here? Entire amount is not buyback. Don't forget that. How many shares are bought back here? Only 50 shares, na? Therefore, only 50,000 will come, na? Correct or not? Yes, 50,000 loss. Okay? This you can carry forward and set off normally. Okay? The way you carry forward and set off normal. Okay? So, is 1,50,000 taxed? Like a dividend? Like a dividend, is it taxed or not? So therefore, can you manipulate like this? Now, you will have one question. My cost is getting lost, right? Don't worry, we will give you the deduction of cost by making this computation. Are you getting the deduction of cost also? 50,000 deduction you are getting. But, you will, the government could have made a simple calculation, na? The government could have done 1,50,000 minus 50, correct? Instead of first computing dividend separate, then capital loss separate, they could have directly done na 1,50,000 minus 50. Tell me na yaar, please yaar. But they have not done this. Why? Because if they give you deduction of 50,000 from dividend, then that 50,000 rupees will get tax relaxation of approximately 40%. Right? Because dividends will be taxed at 40%. Right? 30% plus surcharge and cess. But here you will get tax relaxation against what? Only 12.5%. Are you able to understand or not? Please tell me. They could have given na this 1,50,000 deemed dividend minus cost is 50,000 minus that. But then deemed dividend would have been only 1 lakh. Correct? Now they are taxing 1,50,000 at 30%, 40% tax. But they are giving you tax deduction of 50,000 rupees. Against what? Those capital gains which are chargeable at lower rate. Correct or not? Understood or not? Please tell me. So from 1st October, 3 effects you need to remember. I am a company, you are a shareholder. When I buy back, what will happen first? Will I pay anything? From 1st October, tell me now, forget, I am not interested in 30th September. Company will not pay anything. Will shareholder pay tax? On how much amount? Entire amount deemed dividend. Entire amount deemed dividend. Gone. Will you get any deduction from that deemed dividend? No, no deduction from deemed dividend. Will company deduct TDS? What about the cost? It will be allowed as a capital loss. Take FVC as 0 always. Correct? Understood, everybody? See, the moment you see an amendment, you should come to know that, yes, this is an amendment which looks like that it can come in the exam. Correct or not? It will come, 100% it will come. You can check in the exam. Read this from here. I have put one example also here. You can check this example. Good amendment? Beautiful amendment it is. Now, let's see. Now, for example, you bought 100 shares for 40. Okay. The total cost how much? Now, 20 shares are bought back at 60. Okay. So, how much company is paying you? 1200. That will be deemed dividend. Correct? Now, on this 20 shares, what is your capital loss? 800 will be your capital loss. Correct? Now, later on you sold another 50 shares at 70. Okay. So, what is your sale consideration? 15 to 70, 3,500. What is your cost of acquisition of 50 shares? Into 40, 2,000. This is your capital gains, correct? Now, from this capital gains, can I set off this 800 rupees loss? Tell me, please. Yes, therefore 700 will be taxable later on. Is it clear to everyone? Please tell me. So, this is a calculation. I can say deemed capital gains calculation. Okay. This is a deemed capital gain calculation and this will always be negative. Correct or not? Or it will always be negative only, na, Palani? Yes. Okay. Acha, it will always be negative? What do you think? No. Maybe it can be 0 also sometime. Why? Yes. If there is a bonus shares allotted, okay, after 2001, correct? Then it may be 0 also. But it will never be positive, right? It will never ever be positive. So this is what this small provision is all about, but very important. Obviously, till 30th September, what used to happen, that is our responsibility to put that because the provision changed from the middle of the year. Okay, that is the reason I have put it. But according to me, the more important point is the amendment only. Okay, they will not ask you the pre-amendment scenario. They will ask you the post-amendment scenario only. Don't worry.